Alright, this video, the second teaching, yeah? So question I get asked a lot, what pair do you trade? Yeah? Okay, this one is gonna answer how to find the pair you trade. Yeah? And really, I shouldn't be teaching this one for free. This is usually a mentorship video. However, I just want to give you an insight of the value I want to bring to you guys. So I'm gonna give this one for free. The first thing I want to say, you always want to have the most objective approach you can to the market. Never have emotion with it. Yeah, because that's gonna mess up your psychology. So you shouldn't never trade a pair because it's your favorite pair. For example, people say, I love GBP, JPY, I love Bitcoin, I love gold, I do this, I do that. What you want to do is trade the pair that's gonna give you the best outcome or is gonna give you the easiest trades. Yeah, you don't want to trade something because you had success with it early in your trading career. That's a fallacy. Because you done well with it at the start of your career doesn't mean it's always going to be good for you. The pairs that I trade is usually Euro USD and GBP JPY. I mean GBP USD. Okay, but I usually trade Euro USD and I go to GBP USD if Euro USD isn't clean. Now, why do I trade Euro USD? Okay, this is mainly for the forex guys, but I can touch on Bitcoin and I'm going to touch on Bitcoin for the crypto guys at the end of this. All right. So why I trade Euro USD? Firstly, think about it. What is Forex? What do we trade on Forex? We trade one currency against another currency. Yeah? So, in saying that, let's take the pair Euro USD. It's the Euro against the USD, the US dollar. Get the notepad out, yeah? You should already have the notepad out. And start writing this. All a Forex pair looks at is the strength of one currency against the strength of another currency. Simple. That's all it does. If the euro becomes stronger than the dollar, euro USD goes up. Dollar becomes stronger against euro USD goes down. If they're both strong, it will consolidate. Now, do you want to trade a pair that consolidates? No, it's boring. This is when people complain about, I don't know, I can't trade in these environments, wait for the market to clear up. Alright, cool. I'm going to teach you a lot to never fall in that and how to always find a trending market to trade. Yeah? I'm going to teach you how to find the pairs to trade, and this is going to open your mind to the market. You're literally going to, I know you're not going to watch this and you're going to go test this like, no way, this works, and you're going to go test it with a million currencies. Go ahead and do it. I'm not too bothered. Yeah. So essentially, you want to pair a weak currency with a strong currency. Why? Weak against a weak currency is consolidation. Strong against a strong currency is also consolidation. Yeah? You want to pair a strong currency against a weak currency. That will give you a trending market. For example, if GBP USD, if GBP is strong and the US dollar is weak, GBP USD should be bullish because the pound is strong and the dollar is weak. Therefore, GBP USD should go up. So let me take your attention. This is called the DXY. Yeah? Is the US dollar currency index. Now what this is, it's a strength index for the USD alone. We're not looking at the USD against anything, we're just looking at the USD by itself. Yeah? Now, you see the USD is going up. Yeah? Now I want you to remember exactly how this chart looks. Okay? Remember exactly how it looks. Now, let's go and look at Euro USD. One more time. Remember this, yeah? This low, high, lower, USD, high, low, higher. They're inversely correlated. If the DXY goes up, Euro USD goes down. And why? Because if the DXY goes up, the dollar is strong. Euro USD looks at the euro against the dollar. Yeah? So if the dollar goes down or the dollar goes up, Euro USD will go down. And that's for anything that's crossed to the dollar. Because if the dollar is strong, so the dollar here has been weak. Yeah? If the dollar's been weak in the last, 5 days, then anything crossed to the dollar should be bullish. Bullish move, bullish move. A few bullish days. But the main ones you want to pair the DXY with is the Euro USD. They are inversely correlated. And why is that important? Well, if they're inversely correlated, just look at one. No. Because when the DXY looks like it's going to reverse, Euro USD should reverse as well. Look how clean it is. Euro USD takes out buy side liquidity, delivers to the sell side liquidity, now goes up. The DXY takes out sell side to buy side. When you can line these two up, that is the best confirmation you can get to trade Euro USD. Yeah? Always look at the DXY if you want to trade Euro USD all the time, because that's going to tell you the direction of Euro USD and where it's going. Yeah? If the DXY looks like it's going to go down, so if the DXY takes out this low, Euro USD will come up to take this high. If the DXY goes out to take this high, Euro USD will come out to take out this low. You have to match them all the time. Look at what the DXY is doing. If you're trading Forex, I recommend trading Euro USD with the DXY. The DXY is the breadth of my analysis. I do all of my analysis on the DXY because that tells me where is the dollar going. If I know where the dollar is going, I know where USD is going because the Euro USD is paired against the dollar. Yeah, that's how you know, and that should help with your directional bias. Well, what about if you don't want to trade the USD? Or what about if it consolidates? Yeah. Now, remember I said GBP USD, Euro USD is what I trade. So now let's look at Euro GBP. What is Euro GBP? Euro against the GBP. Now, you're gonna have to rewatch this a few times to understand this. Euro GBP looks at what? The euro against the pound. This is gonna help you determine whether to trade GBP USD or Euro USD. Because what you do now, if Euro GBP is going up, that means strong US dollar and weaker pound. Out of the two, out of Euro USD and GBP USD, Euro USD is the stronger one. Then you look at the DXY. DXY is weak, so the dollar is weak. So out of the two, the pound is weak and euro strong. You want to take the strongest one because the DXY is weak. Therefore, you take euro strong against the dollar, which is weak, and you get a strong euro on the Euro USD. Now let's look at that again. Out of these two, the euro is a stronger one. Out of euro and GBP. Because it's going up, that means that euro is bringing euro GBP up. So that means GBP is the weaker one out of euro and GBP. So let's look at the dollar, weak. Let's look at euro GBP. The pound is the weaker one because it's going up. So GBP USD GBP is a bit weak, DXY is weak, so what should you see? Not as clean, yeah? More sideways. Then look at USD, big move up, GBP USD, you're getting these candles, wiki candles, yeah? So just to reiterate that, Euro GBP tells you which one is strong out of the Euro and the Pound. Whatever the DXY is, so the DXY is weak, you want to take the stronger one out of this pair and then match that with the weaker dollar. So the euro is stronger and the dollar is weak. Now you have your weak currency and your strong currency. You know which ones to trade because a weak and a strong currency is going to give you an explosive move to trade Euro USD. Now, if you don't want to trade the dollar, I understand that. I'm going to give you a secret to find whatever pair you want to trade. You've never seen this before. Forex guys, I'm sure 99% of you have never seen this before because this doesn't happen in any premium. The premiums don't know this, man. They don't look at the market for what it is. They look at it at patterns and support resistance and they look at it as just a place. No, but we want logic. We want logic behind our trades. The first thing we want to do is find a weak currency and a strong currency. So we look to the futures. Yeah, the futures is all to do with the directional bias. Okay, we have the euro futures. Yeah, Canadian futures, British pound futures, New Zealand dollar futures, Australian dollar futures, Japanese yen futures, Swiss franc futures. Yeah, so 6E 1, 6C, 6B, 6N, 6A, 6J, 6S. If you type this in, yeah, you want 6S with the exclamation mark, and that's going to give you the future for that currency. E is for Euro, C for Canadian, B for British Pound, N for New Zealand, A for Australian, J for Japanese Yen, S for Swiss franc. What this does, and you don't, this is so key. Yeah, all the future does is look at the currency itself, the strength of the currency itself, not a pair. It looks at it alone. Now, why does this matter? Because if you're looking at it alone, you can see which currency is the weak one and the strong one. So we know the euro is strong here, strong move up. Now we want to find the weak one, strong move up, sideways. It's coming down here. Yeah, remember, so New Zealand is weak, euro is strong. So let's look at euro NZD because euro is strong, NZD is weak. And there you have it. Strong euro, weak New Zealand, very strong euro NZD. Why? Because the euro is strong while the New Zealand dollar is weak. Of course, euro NZD is going to be extremely bullish. Yeah? Okay, so Australian is fairly weak as well. So let's look at euro AUD. Strong move up. Let's look at the Japanese yen. Overall, it's going down. This is starting to go up. So again, euro JPY. Up move. Yeah? And I'm just doing this now. I haven't practiced this before, by the way. Swiss franc. Okay, now let's look at this here. Consolidation. Yeah? A pair that's consolidating and a pair that's consolidating. Let's take Canadian, which is consolidating, and this pair that's consolidating. What are you going to get? Consolidation, of course. Consolidation and consolidation. It's going to give you consolidation. Yeah? That is how you find your pair. You literally find a strong currency and pair it with a weak currency, and you will have an explosive move to the upside. Same way, if you want to get short, you can just do the vice versa of that. Find a weak currency, match it with a strong currency, of course, that will go down. As well as it works if a currency is really strong and there's another currency in consolidation. If you pair them, they should still be bullish because the bullishness in the consolidation should bring it up. You never want to pair currencies that are both weak or both strong because that's going to get you stuck in consolidation. Yeah? Some people might think, well, this is a stupid video. Why did you do this? It's really not. It's not because knowing the pair to trade and when to trade it is important. You always want to be in a trending market. Those are easier ones to trade. Yeah? And it gives you better insight on what to expect in the market. Don't just trade Euro NZD, Euro AD. There's people that just go through a million pairs to find which one they like. Go through the futures, yeah. Find your strong currency and find your weak currency. It's going to save you so much time than go through every single currency, yeah. Make sure you take notes on that all the time. How simple is it what I said now? Let's just talk about it for a second. How simple is it what I said? It is common sense, literally. However, whenever people come into Forex, they seem to lose their common sense. Why is it? Because the industry is so cluttered with nonsense. Yeah, on YouTube, it's just people trying to grab your money. They will bring you no value. They have no logic to the market. They have no logic. They're just trading a pair because of what they see on the chart. Hold on. At the end of the day, we're trading currencies. So if I get a strong currency and pair it with a weak currency, that pair should be very that one should be very strong. Yeah, you don't want to take a weak currency and a weak currency because what am I going to do with that? They're both weak. It's going to go sideways. Do you get what I'm saying? It's so important to do that. Always do this. I spend a lot of time doing this every single week. Yeah, that's only when the DXY is consolidating. Then I'll look to the futures and find which pair to trade. Yeah, you will never, or if you have seen this another premium, please let me know. Yeah, because this is a teaching. I'm sure it's not really on the internet. Yeah, this is so important, especially for the forex guys. This is so important to know what pair to trade. Because a lot of times you say it's consolidating. My setup's not here. Well, now you got an excuse to find your setup in any pair because you know what pair to trade now. Yeah. So that's for the forex guys. The next bit's gonna be for the crypto guys. If you look at Bitcoin and you look at the DXY, remember Bitcoin is paired against the DXY. Yeah, it's paired against the DXY. So if the DXY goes down, Bitcoin goes up. The DXY goes up, Bitcoin goes down. So even if you're a crypto guy, if it's matched against USD, or I don't know about USDT, but if it's against USD, you want to know where the DXY is going, bro. You really want to know where the DXY is going. Because all crypto is trying to destroy the dollar. So if the dollar goes, so let me tell you when Bitcoin, let's see when Bitcoin reached its all-time high. This is the start of the pandemic, yeah? This is when the dollar melted. Now let's see when Bitcoin went up. One sec, let me go back on the DXY. So it's around 2020, one sec, March. March is when the bull run started, when the DXY melted. You can see it, yeah? March, March, and it was only upwards from here. Now let's touch on Bitcoin, yeah? You lot might not understand this, but let's touch on it. What do I see for Bitcoin? And let's go on the live record, yeah? You don't know this is called a fair value gap, okay? There's what type of liquidity here? Buy side liquidity, yeah? I'm assuming by the end of the week, I'd want to see Bitcoin start going to the downside. I want to see it fill this gap. It could fill this gap if it goes straight past this, yeah? But I want to see it fill this gap, possibly tag this, and then I want to see it go to the downside. That's what I want to see for Bitcoin. If you lot don't know what fair value gap is, I'm going to make a separate video for that. But as of now, you don't need to know about this fair value gap. Yeah? You just need to know that there is buyers above here willing, my bad, to buy on power above this high. To be honest, it's already been taken out just a little bit, but I'd want to see it go to at least the 50% of this candle. Best case, around here, the top side of the box, and then I'd like to see it retrace. But yeah, that's all for this video. Remember, for the crypto guys, you want to consider the strength on the DXY. If the dollar is going up, you should be bearish on crypto. If the dollar is going down, start becoming bullish on crypto. For the forex guys, you have all these futures. Pair the weak currency with the strong currency to get the most explosive moves. Yeah? So I hope this helps with getting your bias, knowing which pair you should actually be trading, not trading a pair just because you have some sort of emotional attachment. Yeah? You can backtest it, see it when a currency was streak, and see when a currency was strong. That's a streak. I mean, currency is weak. What am I talking about? Anyway, weak currency with a strong currency. Backtest it. Yeah, go into the past, see when the euro was weak and when Japanese yen was strong. Then you'll see Euro JPY go down. For the crypto guys, look at the DXY and look at any coin that's against the USD and look at it when the DXY is strong and weak. What is going on with that crypto pair? That's it for today, guys. Yeah, I hope this helps. If you've got any questions, message me in the chat. Always leave a review. You know it's always welcome. If there's any feedback, give feedback to me as well. Yeah. All right. Take care.